Greetings, traders! Today, we're delving into the fascinating world of liquidity analysis using the Liquidity Price Depth Chart indicator by Lux Algo. If you're ready to elevate your trading strategy, stay tuned as we guide you through the nuances and functionalities of this powerful indicator. Before we dive in, don't forget to hit that like button, subscribe for more insightful content, and let's get started. To comprehend the Liquidity Price Depth Chart, let's start with the basics. This indicator is designed to provide traders with a visual representation of market liquidity. Essentially, it helps us see where buy and sell orders are clustered at previous price levels. First things first, ensure you have the Lux Algo indicator installed on your trading chart. Search the indicator Liquidity Price Depth Chart by Lux Algo. Before we dive into trading strategies, let's check out these indicator settings on the TradingView platform. Here's how to do it. Place your mouse on the indicator and right-click. Navigate to select the Settings option. Under the Settings section, there are the bullish elements. Bullish Price Highest Volume Location. This shows the location of the bullish price variation with the highest associated volume using one horizontal and one vertical line. Bullish Volume Percentage. Displays the bullish volume percentage at the bottom of the depth chart. Next, bearish elements. Bearish Price Highest Volume Location. This shows the location of the bearish price variation with the highest associated volume using one horizontal and one vertical line. Bearish Volume Percentage. Displays the bearish volume percentage at the bottom of the depth chart. Next is the miscellaneous. Volume Percentage Box Padding. Width of the volume percentage boxes at the bottom of the Liquidity Price Depth Chart as a percentage of the chart visible range. The chart displays horizontal bars at different price levels, each representing the amount of liquidity. The thicker the bar, the more significant the liquidity at that level. Understanding these levels is crucial for making informed trading decisions. The displacement of a line relative to the x-axis is an indicator of liquidity, with a higher displacement highlighting prices with more volume. These can also be easily identified by only keeping the dots. Visible voids can be indicative of a price associated with significant volume or of a larger price movement if the displacement is more visible for the price axis. These areas could play a key role in future trends. Additionally, the location of the bullish-bearish prices with the highest volume is highlighted with dotted lines, with the returned horizontal lines being useful as potential support resistances. Clusters of liquidity can be spotted when the liquidity price depth chart exhibits more rectangular shapes rather than V-shapes. The steepest segments of the shape represents periods of non-stationarity, high volatility, while zones with clustered prices highlight zones of potential liquidity clusters, that is, zones where traders accumulate positions. At the bottom of each area, a percentage can be visible. This percentage aims to indicate if the traded volume is more often associated with bullish or bearish price variations. This indicator can be used for the spotting, accumulation, and distribution phase in the market. The Liquidity Price Depth Chart helps us identify areas of accumulation and distribution. When liquidity is concentrated at a specific level, it suggests a potential turning point or strong support resistance. Now, let's discuss practical trading strategies using the Liquidity Price Depth Chart. Strategy 1. Confirmation of breakouts. Use the indicator to confirm breakouts. If the price breaks above the green dotted lines level and there's a surge in bullish liquidity, it adds conviction to the bullish breakout. Conversely, if there's a lack of liquidity, it might be a false breakout. Likewise, if the price breaks below the red dotted line level and there's a surge in liquidity to the downside, it adds conviction to the bearish breakout. Conversely, if there's a lack of liquidity, it might be a false breakout. Strategy 2. Scaling into a position. When entering a trade, observe where liquidity clusters. Scaling into a position where liquidity is high and scaling out where liquidity diminishes can optimize your risk management and maximize profits. How can we detect long positions with the Liquidity Price Depth Chart indicator? To generate a bullish trading strategy, Step 1. Look for a bearish swing on the price chart. Step 2. Look for the price to trade into the red dotted line. Step 3. Confirm a surge in liquidity level at the red dotted line zone. Step 4. Wait for a bullish strong breakout candlestick pattern to be formed above the red dotted line. Step 5. Look for the bullish percentage strength indicator to pop up higher than the bearish percentage strength on the price chart. Finally, consider entering a long position with appropriate risk management. For scaling into a long position, watch out for a bearish pullback and see an increase in bullish liquidity before adding into a long position. Target a minimum of 2 risk-to-reward ratios or to the next horizontal resistance line on the price chart. How can we detect short positions with the liquidity price depth chart indicator? To generate a bearish trading strategy, Step 1. Look for a bullish swing on the price chart. Step 2. Look for the price to trade into the red dotted line. Step 3. Confirm a surge in liquidity level at the red dotted line zone. Step 4. Wait for a bearish strong breakout candlestick pattern to be formed below the red dotted line. Step 5. Look for the bearish percentage strength indicator to pop up higher than the bullish percentage strength on the price chart. Finally, consider entering a short position with appropriate risk management. For scaling into a short position, watch out for a bullish pullback and see an increase in bearish liquidity before adding into a short position. Target a minimum of 2 risk-to-reward ratios or to the next horizontal support line on the price chart. To truly master the liquidity price depth chart, you need to fine-tune your approach. Experiment with different time frames to identify liquidity patterns. Shorter time frames may reveal intraday levels, while longer time frames provide insights into broader market sentiment. Consider combining the liquidity price depth chart with other indicators like moving averages or trend lines for a comprehensive analysis. This synergy can enhance the accuracy of your trading signals.